All right, so there's a new SME IPO hitting the market, and it's called Pan HR Solutions. In this explainer, we're going to break it all down for you, peel back the layers, and really figure out if this is a golden opportunity or maybe a risky venture. Let's get right into it.
So that really leads us to the big question here. Is Pan HR Solutions a hidden gem just waiting to be discovered in the SME space? Or is this a high-risk bet that you should think twice about? To get to the bottom of this, we've got to look past the company name and really start to follow the money.
Okay, so first things first. To figure this out, we've got to understand what Pan HR Solutions actually does. Now, the name might give you one impression, but the reality? It's something quite different. So let's take a closer look at their actual business model.
You hear a name like Pan HR Solutions, and you're probably thinking, high-level HR strategy, shaping company culture, maybe advising executives in a boardroom. But that's not really the case. The reality is that their core business is manpower supply. They're much more focused on providing a huge workforce on the ground. So think less strategy and a lot more staffing. So if you look at their core services, it gives you the full picture. They do everything from the actual manpower supply and recruitment all the way to end-to-end payroll management. They also handle facility management, housekeeping, office staff, and they do compliance audits for crucial regulations, things like EPF, that's the Employees Provident Fund, and ESI, the Employee State Insurance. They're basically a one-stop shop for businesses that want to outsource all of these functions.
Okay, so we know what they do, but the next logical question is, who are they doing it for? This is where we start following the money. And trust me, this is where the story gets really, really interesting.
And just to give you a sense of scale here, check out this number. Over 10,000 people. That's the total number of personnel they've employed and have out working at their client locations. So this is no small operation we're talking about. They're a pretty significant player, but the size of their workforce, that's just the beginning of this story.
And here's where we find the first major clue. An absolutely staggering 87% of their entire workforce is deployed in the e-commerce sector. Now, this isn't just a focus area for them. It's an extreme concentration. It means their success is heavily, and I mean heavily, tied to the ups and downs of just one single industry. And if you thought that was concentrated, hold on. It gets even crazier. The risk doesn't just stop at the industry level. Take a look at this. Over 68% of their revenue comes from a single customer. You add in the next 9 biggest clients, and you're looking at over 98% of their total revenue. Think about that. A company with over 10,000 people on its payroll relies almost entirely on one single client. So when you see that kind of dependency, you immediately want to look at the financials, right? And when we do, well, it's a bit of a puzzle. We see two trends that are basically telling two completely different, conflicting stories. So on the one hand, you've got this. After a decent jump back in 2024, the company's revenue has just completely stalled out. It's gone totally flat. For any company that's about to go public, seeing your top-line growth just stop like that, that's a huge red flag if you're thinking about investing. But here's the really weird part. At the exact same time their revenue is flatlining, their employee headcount is actually growing, which makes you wonder, right? How are they hiring more people but not making more money? It points to some serious questions about how efficient they are, or maybe their ability to charge those key clients more. But it's not all bad news. On the other side of the coin, the company is pretty much debt-free, which is great. They're consistently profitable, and their profits have actually been growing despite that flat revenue. And with a return on equity over 31% and a return on capital employed over 38%, I mean, those are some seriously impressive numbers that suggest they're really good at managing the money they have.
So you see the conflict here, right? On one side, you have this massive dependency problem and revenue that's gone flat. But on the other, you have a super strong, profitable, and debt-free balance sheet. And this brings us right to the heart of it, the bull case versus the bear case. And this slide really just puts it all side by side. The bear case, the argument against investing, is pretty clear. You've got extreme client and sector dependency, flat revenue, and just a ton of competition. The bull case, though, rests on the fact that this is a financially sound company. It's debt-free, it's profitable, the IPO valuation seems reasonable, and hey, HR outsourcing is a growing trend in India.
This quote from one of the reports we looked at really hits the nail on the head. The manpower and HR services industry is incredibly crowded. You've got big, organized players and tons of smaller, unorganized ones. In an environment that competitive, where it's hard to stand out, even just getting average returns can be a real struggle.
Okay, so keeping that intense competition in mind, let's start wrapping this up. Before we get to our final thoughts, here are the nuts and bolts, the practical details of the IPO itself.
So here's the deal at a glance. The price band is set between 74 and 78 rupees a share. The lot size is 1,600 shares, which means your minimum investment comes out to just under 1.25 lakh rupees. Post-IPO, the whole company will be valued at around 56 crores, and it's going to be listed on the BSE SME platform.
So when you're making your final call, this is basically your mental checklist. First, you have to acknowledge the extreme dependency on one client in one sector. Are you comfortable with that? Second, you have to ask yourself why revenue is stalled while headcount is rising. Third, consider the super competitive industry they're in. And finally, you have to weigh all of those risks against the very real strength of their debt-free, profitable status.
And that really leaves us with the million-dollar question, doesn't it? Is a strong, debt-free balance sheet enough to overcome the massive, massive risks of dependency in such a cutthroat market? The answer you come up with would decide if Pan HR Solutions is a hidden gem or a high-risk bet. The choice ultimately is yours.